This video is created by Jagrat Creation. It is on liquidation of company. I wish to solve one sum on liquidation of company, wherein statement of affairs is required to be prepared by the liquidator. Observe the sum on the screen. This is the sum which I wish to solve here before you. Prepare a statement of affairs to be submitted to the meeting of members and creditors. So we are required to prepare a statement of affairs. Now, as you know that winding up of a company is a legal process by which the artificial existence of a company is brought to an end. For that purpose, a person is appointed to administer the process of winding up. That person is known as liquidator. On liquidator being appointed, he assumes all the assets of the company. He invites all claimants against the company to prove their claims. And in light of the information that he is obtained about the assets and liabilities of the company, he is required to file a statement of affairs to the company law if he is an official liquidator, or he is supposed to file this statement of affairs to the members if it is members voluntary winding up, or he is required to file this statement of affairs to the creditors in case of creditors voluntary winding up. Now, what is this statement of affairs? After appointment as a liquidator, he assumes all the assets. He finds the realizable value of all assets. He recognizes all the claims against the company. And in light of that, he will decide, does this company has sufficient funds to pay its all unsecured creditors? Will there be surplus available for preference shareholders after making payment to unsecured creditors? Or if after making payment to preference shareholders, is surplus available for equity shareholders? Or even if the equity share capital is totally paid out, even after that, do we find any surplus left in the company? For that, he is required to make a statement of affairs. In this statement of affairs, the liquidator takes ownership and possession of all the assets and find the estimated realizable value. He is not selling all this asset. He is valuing the asset. He estimates the amount that could be realized for machinery, for leasehold property, for investment. For investment, he estimates that he will realize 12,000. He has not actually sold investment and realized 12,000 rupees. That is not the case. He has made a valuation. So these are the estimated values for the various assets. Now, from this realizable value, he is first required to pay fully secured creditors. In statement of affairs, liquidation expenses and liquidators' remuneration is out of question because it's an estimate. So after making payment to fully secured creditors, he is required to make payment to preferential creditors. Here you are told that the preferential creditors amounted to 3,000. There were preferential creditors amounting to 3,000, which were not included in the creditors of 60,000. So preferential creditors 3,000 are over and above this 60,000 creditors given in the balance sheet. After making payment to preferential creditors, he is required to make payment to debenture holders having floating charge over the assets. So 1,50,000 debentures are required to be paid. He is going to pay. He is not actually paying. Then he has to pay unsecured creditors. After that, if he has got funds, he may pay preference shareholders. Here, preferential capital is not there. Then he will make payment to equity shareholders against their claims. So he is preparing an estimate what is the state of affairs of a company that he is supposed to report as per law. Now when he is required to prepare a statement of affairs as required in law, the first list that he prepares, how many assets he holds with him on which nobody is having a charge for their claim. So unpledged assets. So he will make a list of unpledged assets. What is its realizable value? That is known as list A. If you observe the bank overdraft 54,000, bank overdraft is secured by a deposit deed of leasehold property. So leasehold property 2,80,000 is a property on which bank overdraft has a charge, has a claim. So this leasehold property is subject to charge. It is a pledged property. So machinery, investment, stock and debtors are the assets which are not pledged and they are covered in the list. So when preparing a statement of affairs, the liquidator first prepare list A. So list A will include machinery, investment, stock, debtors and cash and bank balance. These are the assets with its realizable value will be recorded in list A. And the total of these assets, if you work it out, that works out to be this much. Cash balance 3,000, then investments 12,000, then debtors 1,40,000, then stock 6,000, then machinery 1,80,000. Total 3,41,000 is the amount that liquidator presumes that he will receive for the purpose of settling the claims against the company. Now if you observe, here machinery is first, but I have written machinery last. Debtors 1,40,000, that I have recorded in the third. So when you write in list A, you should write assets in such a sequence which has a realizability or maturity faster than the subsequent. So cash balance is the available asset readily available for payment of liability. Then next asset that you can convert into cash very fast is considered as an investment. Investment can be sold and the amount could be received fast. So next fast realizable asset is investment. After that you can realize from debtors, because it's a monetary asset, the monetary value is not required to be negotiated. It is already a settled claim. So next realizable asset is debtors. Then you can sell off the stock for 6,000 and machinery, you will take time to sell machinery. So machinery is to be recorded in sequence last. So total of assets which are not pledged, they are recorded in list A in a statement of affairs. I'm just explaining theory part. Now this leasehold property 2,18,000 and bank overdraft has a charge of 54,000. So I will pay bank overdraft 54,000. Let their claim be settled against the realizable value of leasehold property. And the remaining amount, that is 2,18,000 minus 54,000, is the amount available to the liquidator for the purpose of settlement of the claim. So, next, 2,18,000 minus 54,000, that is list B. So, list B is made of claims which are there against the asset. So, assets which are pledged, mortgaged, or on which the charge has been created, all such assets will be recorded in list B. Here list B surplus is 1,64,000. Now the total cash available to the liquidator is 5,05,000. From this available cash, fully secured creditors are already taken care of because they have already collected their 54,000 rupees. Next payment is to be made by the liquidator is preferential creditors 3,000. So these 5,05,000 is available for preferential creditors, debenture holders, unsecured creditors, preference shareholders, and at last for equity shareholders. So 5,05,000 is available for all these claimants in sequence. From that, I will pay first of all preferential creditors. I will prepare a list of all preferential creditors. That total I will work out. That total is known as total of list C. That will be paid from 5,05,000. In this sum, 3,000 is the list C. Preferential creditors 3,000 will be paid. After making a payment of 3,000, next available funds are to be utilized for the purpose of payment of this debenture holders 1,50,000 because they are having a floating charge over the assets. So 5,05,000 minus 3,000, 5,02,000. This is list D. List D means payment to be made to the creditors who are having floating charge over the assets. Here in this case it is debentures. Now I got 3,52,000 available with me for payment next to debenture holders is unsecured creditors. So unsecured creditors are 60,000. So from 3,52,000 I'll prefer to pay 60,000 to unsecured creditors. Now I will have 2,92,000. So unsecured creditors are also paid. 2,92,000 are the surplus available. Next I am required to pay preference share capital, but it is not there in this sum. That preference share capital is as per list F. After that I am required to pay to the equity shareholders. They are as per list G. So F, preference share capital nil, equity share capital 2,40,000. So list H says that after making all the payments even to equity shareholders, there is a surplus of 52,000. So this list H shows surplus available after satisfying all the claims. Or it may also show you the deficiency, means funds not available to settle all the claims against the company. So list H shows either deficiency or surplus after making payment to all the claimants of the company out of the proceeds of assets of the company. This is how a statement of affairs is to be prepared. Now all this list that I have described, let me just show you, because this is not the problem that I am solving. I want to discuss the theory also for statement of affairs. So this is theory and practical problem combined sum. So this list A, assets that are not placed. List B, assets that are placed. List C, preferential creditors. List D, creditors having floating charge over the company, means debenture holders. List E, unsecured creditors. List F, preference shareholders. List G, equity shareholders. You will get the surplus or deficit at the end. Look at the list here before you. List A, full particulars of every description of the property not specifically placed are to be shown. Assets specifically placed and creditors fully or partly secured are demonstrated in list B. Preferential creditors, rates, taxes, salaries, wages, otherwise their list is to be prepared and that total list C will be deducted from the available funds. List A, debenture holders secured by floating charge. Unsecured creditors C. List preference shareholders list F. List G, equity shareholders. Deficiency or surplus list H. So this is how the statement of affairs is being bifurcated. Now I want to prepare a statement of affairs here before you. So this is a continuous. Don't think that they are opposite to each other. It is a continuous, but as I want to bring sum and details for the purpose of solving the sum, but remember this statement of affairs continues in this fashion. Now as I told you, let me write down list A, list B, assets specifically placed. In list B, you should prepare this column. Estimated realizable value, amount payable to creditors. If the realizable value is more, then it is surplus. If the realizable value is less, then it is known as deficiency. Deficiency will be treated as unsecured creditors and will go to the unsecured creditors list. Now this estimated total assets available for payment to preferential creditors, debenture holders, secured by floating charge and unsecured creditors. So this total is available for making payment to, in priority, first to preferential creditors, then to debenture holders, then to unsecured creditors, then to preferential holders, then to equity. So this is how it is to be prepared. This is a format. I'll explain this gross. This I'm going to explain after 5 minutes. I write the same thing once again here. Estimated total assets available for preferential creditors, debenture holders by secured or by floating charge, unsecured creditors brought forward. Now secured creditors already paid out of the assets, they will be recorded gross liability, but here it's going to be nil. So secured creditors, to the extent to which the claim are estimated to be covered by the assets specifically pledged, from this total you are required to pay preferential creditors. In our case it is 3,000. After that you are required to pay to debenture holders. So keep some space because we are going to write numbers over here. Then you are required to pay unsecured creditors. Then you are required to pay preferential capital. Then you are required to pay equity share. So these are the list that I have recorded. Now I will start with the sum because I have already explained all these things to you. So estimated surplus as regards members, this is list H. So this is the pro forma for statement of affairs. This I have already explained to you just in a rough note while explaining the sum. The following assets are valued as under machinery, realizable value 1,80,000. That I write last. Notice it. I have explained to you why I write last. Then leasehold property, it's a mortgage asset. So realizable value of leasehold property, bank overdraft is secured by the deposit of title deeds of leasehold property. So leasehold property realizable value 2,18,000. Bank overdraft is 54,000. So out of this realizable value 2,18,000, 54,000 bank overdraft will be paid. So there is a surplus available 1,64,000 that will go to the outer column. Now, after recording these things about, just understand. So, assets specifically pledged, its gross realizable value. So 2,18,000 is a gross realizable. This is a reporting requirement. This 54,000 gross liability is already paid. Now nothing is to be paid because they are already paid. The payment will be recorded in the outer column. This 1,64,000 is available to the liquidator for payment all the claimants of the company in sequence. So this 1,64,000 will go into the outer column. Estimated surplus from assets specifically placed 1,64,000. So this is how this is done. Now investment realizable value 12,000. List A, not pledged. Stock, list A, realizable value 6,000. Debtors 1,40,000. See, look at the sequence in which I write. It is a liquidity preference. How fast you can convert these assets into cash, on the basis of that criteria, these assets are to be recorded. Investment can be converted into cash faster than debtors. Debtors can be converted into cash faster than stock. Stock can be converted into cash faster than machinery. And with that criteria, these assets are recorded. Notice it. So all these details are over. Now, this is the details available to me. Bank overdraft is secured by the deposit. Now preferential creditors are 3,000. See, list is already there. Preferential creditors, gross and net liability 3,000. Then unsecured creditors, list E, they are to be paid in sequence. After that, equity share capital is to be paid. Cash balance, debentures are to be paid. list D. See, this is a sequence in payment is to be made that I recorded in the field. Cash balance 3,000. Now notice, except profit and loss account, all the details are considered. Profit and loss account is not a claim or a recoverable asset. So I have a total. You know that it is 3,41,000. I have already explained. To that 1,64,000 added to 5,05,000. This 5,05,000 is available. See, 3,14,000. This is a gross realizable. This is the total gross assets that is going to be realized. The difference between this number and this number is 54,000 paid to unsecured creditors. Paid to secured creditors. Now this 5,05,000 is available. Estimated total assets available for preferential creditors, debenture holders, secured by floating. So this is how the payment is to be made in sequence. So if you pay 3,000, you have got 5,02,000. Notice the language that I write. That's very important. 5,02,000 estimated balance of assets available for debenture holders, secured by floating charge and unsecured creditors. So this is the funds available for debenture holders and unsecured creditors that you are supposed to write. This is one way to write. Now if you deduct this 1,50,000, then you can write that the funds available for unsecured creditors, or there is another way of writing it. 3,50,000. You can write against 3,50,000 what? Estimated balance available for unsecured creditors, or alternatively what you can write? Estimated surplus as regards debenture holders. When you use the word regards, then you have to make a reference of previous payment made, or when you make a reference available for, then you have to write the next claimant. So here estimated surplus as regard debenture holders. Instead of that I can write estimated surplus available for unsecured creditors. That also I can write. Now unsecured creditors are paid. So that is known as what? Estimated surplus as regards creditors. So estimated surplus as regards creditors. So after making payment to unsecured creditors, what funds are available? There are 2,92,000. From that you are required to pay equity share capital 2,40,000. So equity share capital could be totally paid. So surplus available 52,000. So this is how statement of affairs as required to be prepared by the liquidator as prescribed in law is being prepared and worked out here before you. Once again, this segment is a continuous segment. So this is continuously recorded, but for my convenience and explanation purpose, you find them just opposite to each other. But in examination, this should be considered as a continuous one. This is how I have tried to explain you how the liquidator prepares statement of affairs. Still I am required to explain more details how this surplus has arisen, how the deficiency is explained. For that, there is another list H is required to be prepared that I am going to consider in my subsequent lectures on liquidation of company. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to